All right, everybody. Good morning. This is Joey Brignac. Today we are going to go over the Philadelphia American Fixed Benefit Health Plan. The Fixed Benefit Health Plan has a number of useful, situations that can be used. One of the, it's a complementary product that can be used for ACA. It can be used for I like it for the 60 to 64 market. When you have a Medicare spouse in the house, where you have someone who is about to get you have a Medicare spouse, and then you have someone who is 63 years old and they have a couple of years before they get on Medicare. So I like it for that. It fills in the gap. They're coming off of Cobra. They don't get a subsidized premium. They need something they're relatively healthy. They need something that has good quality coverage, but yet it's something that they can afford for the next couple of years. This is the Philadelphia American Plan. I've had this plan on me and my family for quite a while prior to coming to Copeland. It is, I feel like, one of the most complete plans out there, the way that we have it packaged. The plan itself is not the complete package. We put a couple of riders with it that I will go over with you. But the main thing I want to get across today with you is that it is an underwritten plan. It's not guaranteed issue. The way our plan looks and the way I explain it is because it is underwritten. We cannot call ourselves a major medical. It does have, it's a fixed benefit plan, meaning we pay benefits, we don't pay claims. And I'll go over all this with you, but I like to set the stage on what it looks like and how we do it and the reasoning behind what we're looking at and the main thing that we're trying to do. The product itself comes in multiple categories, multiple benefit packages. What I have done is taken all that guesswork out of that for you. I have given you the benefits that when I've sold over a couple of hundred of these, this is what I've sold that encompassed probably 98% of what I had to my clients. The persistency is fantastic. I haven't sold anything in over 6 years, and I still have 70 clients still on the books. And now take that. A lot of them went into Medicare. I had some that got jobs. There was people who fell off the books due to multiple of things. But I wanted y'all to understand that there's great persistency there. There's great income here, and it has a great way to fit into your current conversations with your Medicare clients. And it's a great conversation piece. I have letters you can mail to your current book of business, letting them know what you specialize in. There's a lot of ways that I've helped agents, increase their income by $3,000, $4,000, $5,000 a month by starting to ask and talk about the Philadelphia American Fixed Benefit Health Plans. So let me go here to share my screen. Is it today? Yeah. All right, so go here. All right, so the health plans is an affordable approach to healthcare. Okay, and like I said, this is not for everybody. This does not take the place of someone who gets a subsidy, someone who has health issues and needs a guaranteed issue. That's not what this is for. Okay, These are for people who are relatively healthy, not a marathon runner, but someone who has, maybe hypertension, high blood pressure, type 2 diabetes. We take those. There are a lot of situations where we take people who have health conditions, but they're not. Gives them an alternative to what we're looking at. This is a PPO, not an HMO. Okay, so there's a lot of flexibility in our plans. You can go to any doctor, any hospital that you choose. Things to think about when we're going through this is that we do not pay claims. Like I said, we pay benefits because we are a fixed benefit plan. And a lot of times the customer or the client may get money back because our benefits may be more than what the claim is. So we have to give it back to the insured. We give people access to their money. Okay, you can use it however you want to use it. You're not tied to a certain doctor, to a certain situation, and we pay it based on the plan, not the claim. Remember, we have our plan comes in multiple benefits, so you can pick and choose. But then again, like I said, I've taken away the guesswork for this for you, which you will see shortly. These are our potential groups of people that this fits best for. No insurance due to premium. Okay, so they get they do not get a subsidized premium. Okay, they make over 400% of the federal poverty level. All right, and if you don't know if you have a federal poverty level chart, shoot me an email at the end and I'll send it to you. It's a great chart to have. Okay, they're self-employed. A lot of self-employed people are out of the income area, so they do not get a subsidized premium. People who are on COBRA. I used a scenario early on where you have a husband and a wife. Let's say one is turning 65. The spouse is exhausting COBRA. The COBRA is, or wants to get COBRA. The COBRA is expensive. This is a great alternative to that, and so they get this plan. People in the gap situation. What I mean is that you have someone who is in the 60 to 64 range. They are in that gap area before they get on Medicare. This is it. We take children only, so you don't have to have a parent or a guardian on the plan, and you don't have to have a social security number. You can have a TIN number to get this plan, but you have to be in the United States for 2 years to get the plan. And I like the carve out. The carve out is becoming more and more relevant because I'll use myself as an example. Anybody for an example. So you have someone who has group coverage. Their group coverage is relatively inexpensive. So they get, $50 a paycheck for good group coverage, but the spouse is $250 or $400 a paycheck. Okay, which isn't very affordable. So they aren't taking the coverage on the spouses or the kids. So we carve them out. We give them the Philadelphia American plan, and the employee keeps his group coverage because it's very affordable. There's no reason not to. That's called the carve out scenario. That's where that comes into play. These are your main 7 basic scenarios that really look at coming into play for your for the fixed benefit high-end fixed benefit plan. So this is the Health Saver Gold, and we have 2 plans. We have the Health Saver Gold, and we have the fixed and we have the Optimum plan. The Optimum plan is a newer plan. It's actually I like it because it has better benefits for inpatient, has a little bit less for outpatient, but I'm here to protect for outpatient needs. For inpatient needs. Because the inpatient is where a lot of the claims are going to incur. So if I can get more benefits for inpatient and have stronger benefits, that's what I want. So I'll go over the Health Saver Gold, but I will also show you the Optimum plan here in a little bit, because it is a newer plan that was approved here recently, just here in the last month. And it's a very good plan. And it follows along the same patterns of the Health Saver Gold, but it is a little bit different, but it does have cheaper premium. So this kind of goes for both plans. It has a $5 million policy lifetime maximum. You have 3 annual maximum benefit amounts to choose from. Okay. You have 3 benefit options to pick from. You can choose any doctor or any hospital without a penalty. That's the great part of the flexibility of this plan. For additional savings, okay, we have the First Health PPO network, which uses the Aetna network, and you have New Era Telehealth, which is 24/7 free teledoc service. You have Point Health, which helps with if you go to a non-PPO hospital, they will help you reprice it as it was a PPO. And then Philadelphia American has some of the best ancillary benefits to help you save money with Coral Bundle, the fair pricing tool, RX Saver by Drexy, and they have the mobile benefit, the mobile app. All of these, that's what sets them apart, is that they add so much more to your policy to help your benefits go farther. They have so much internal help for policyholders to call, for the policyholder portal. There's so much information in there that it makes the clients very welcome, their benefits go farther, a wealth of knowledge. So here's the Health Saver Gold. And again, it also follows the Optimum, but this is my base sales presentation. Okay. So whether it be the Health Saver Gold or the Optimum, I go with the 2 units. Okay. That's the middle column, which I'll show you in a minute. I go with the $250,000 per calendar year. I go with that's the $5 million policy max. I go with the $5,000 deductible. Okay. The deductible only applies if you go in the hospital. All outpatient and day surgery have no deductible. Also, they give you a $2,000 administration fee, so that really lowers your deductible to $3,000. When you put all that together, the $5,000 deductible is the best money purchase, gives them the best bang for their buck. 2 additional things that we put on there is a 24-hour accident plan. Go with the 2 units, always go 2 units. It comes in 1 and 2 units, which is $2,000 and $4,000. The double benefits is only $8 difference in premium. So it makes no sense to go $2,000 in benefits, and we can go $4,000 for $8 more. So always go 2 units. And then you have the specified disease plan, which is a true health plan. It comes in very high deductibles of $25,000 and $50,000. Now you're saying to yourself, why would I want to sell a deductible that costs that much? Because it is a false deductible. And what a false deductible means is that something or someone else is paying the deductible, not the insured. The Optimum plan or the Health Saver Gold plan pays the deductible. And then once the deductible is met, both plans pay at 100%. That's what makes this plan, and that's what makes this coverage so wonderful and so complete. It's if they can't afford the specified disease, because specified disease can get expensive, then you go $30,000 critical illness, and their critical illness plan is a dual critical illness, meaning it pays for circulatory and it pays for cancer. So in essence, you have a $60,000 critical illness policy. This is what it looks like. This is how that you can look at how you pick your benefits. In the upper left-hand corner, you have your calendar year maximum benefits per insured. You have the $250,000, $500,000, $1 million. The reason I go with the $250,000 is because that's how much the company is going to pay out in 1 calendar year. Okay, not how much the claims are. For a company to pay out $250,000 in one calendar year, you're going to have a claim in excess of 750 or 800,000. It's just we've only had one claim go in excess of $250,000 in one calendar year. The way it gets repriced, it just doesn't happen. Okay, you hear the ones on TV that they were a $2 million claim, all of this. In essence, it doesn't happen, especially when we underwrite and we're not taking people who already have current severe health conditions. Just doesn't happen. The benefit level is the plus, the 2 units, the middle one, and it's the 5,000 deductible that I mentioned. Remember, it only applies if you go in the hospital. Look down under 5,000 right here. Look down under 5,000 deductible. You see the $2,000. That's that admin fee that I was talking about. Just to validate what I was talking, you have the 2 check marks here. Deductible applies. That's the only area that the deductible applies, is just right there. Okay, so that just validates what I said. I'm not going to go through and read what the benefits are, because we can read benefits. I'm going to talk to you about how to sell it, why you should sell it, and the importance of selling it. But one of the main things that are important here is the 3,000, the 4,500, or the 4,500 and 6,750. Those are very good, very high benefits when your average hospital stay is $2,600 per day in the hospital. So we're above what it takes to be in the hospital to help offset the extra costs. Another great benefit is the rehabilitation and skilled nursing, no deductible. Under the plus column, you have $1,500 per day. That is a wonderful benefit. Okay. And go down here to outpatient radiation and chemotherapy, $1,500 per day. No cap. Only your $250,000 is your cap. That is wonderful coverage. Okay. That is fantastic. Go back up one section here to your outpatient hospital radiation and chemotherapy. So it's broken down into 2 sections. You have your performed under general anesthesia. This is just for the facility. We'll pay $3,500. It doesn't require general anesthesia. We'll pay $1,500. And this is how the bottom works. So we pay off of the Medicare reimbursement schedule. So we pay off of here. We'll pay 2 times RBRVS. That just means Medicare reimbursement schedule. That's all that means. What that means is, let's say that Medicare, just for mathematical purposes, let's say Medicare approves $5,000 for that surgery. Okay, 2 times that would be $10,000. That's how much the surgeon would get. Okay, the assistant surgeon, we would do 20% of $10,000. Anesthesiologist, we get 25% of $10,000. Now, the great thing is that we do not take away from that $10,000. It adds on to the $10,000. Okay, so that's an addition on top of the $10,000, not a subtraction of the $10,000 for the assistant surgeon or the anesthesiologist. That is the great part of this policy. Everything we do, we add on. We do not subtract. But that's how a surgery works. Okay, whether you are in the hospital for cancer surgery or for gallbladder surgery, it doesn't matter whether you're in an inpatient or an outpatient surgery. Our surgery benefit is very robust, and it's right in line with what is being charged. On the news, it's probably been about 8 months now. They were interviewing a hospital, and they said hospitals are accepting 200% of what Medicare allows. Well, guess what? 200% is 2 times. Okay, so we are right in line with what's being discussed and what is being approved for services. Okay, this is the inpatient part of your policy. Okay, very simple. It's not complicated. Do not complicate it. Okay, I've given you the platform, I've given you the foundation on what you should show them. Put your blinders on and just show them when you do a quote, when you're talking about it. Don't look at all the other columns. Don't look at all the other numbers. Okay, talk about what is important in your presentation. Talk about what you need to look at and what is looked at inside the numbers that are being discussed. Okay, don't get into RBRVS. Okay, just say that we pay 2 times what Medicare. Okay, we have a very high Medicare. We go by the Houston surgery schedule. Okay, it's highest in the country. All right, so we make sure we have got all of our I's dotted and our T's crossed. Here is your outpatient part. The outpatient part works very similar to the inpatient part. Okay, but it has a little bit, like I said, ours has one of the best outpatient features in the business. So we pay $6,000 per year per person for outpatient benefits, and that's more than enough. And I'll kind of explain how some of these work. So under physician indemnity benefit, we have 20 doctor visits per year. Now that 20 doctor visits per year can be broken up in a multitude of ways. Okay, you can use them for a specialist. You can use them for a GP. You can use 6 of them for chiropractic. The main thing is that it's 20. Okay, however it culminates, however it adds up, the number is 20. Okay, that's so you get 20 office visits per year. Okay, and so that is the good part about this, and it adds up. So if you go to a doctor, go to a GP, let's say the other day I went for upper respiratory, so I got $120 for my visit. I got an injection, a steroid injection, so it would have been 60, and so that my bill would have been 100. I would have gotten $180 for my bill. Okay, and I think my bill was $150 with my injection and my doctor visit. Okay, so I would have gotten back $30 if I would have gone to if I had my Philadelphia American plan. Instead, I had a $30 copay. I actually spent $30. That's just how a fixed benefit plan works in culmination to a copay plan. Okay, on how we reimburse versus our benefits versus paying on the claim. Okay, like I said, what's the most important thing here is don't complicate everything. Okay, let them know why it looks the way it looks. Okay, the reason our plan looks the way it looks is because we underwrite. Get that out of the way right away. When I show you my objections and everything, make sure they understand that. Okay, it's very, very important. Another one that I like is $500 per MRI PET CAT scan. Now, this is a great feature because a lot of MRIs and CAT scans, they cost around $500. And I'll give you another personal story about my daughter. So she had a hairline fracture in her foot, and she needed to go to. So we called in and got ordered an imaging place. They looked up and said, "Yeah, you're in PPO network. It's going to be $750 for your MRI." I went. One second here. Sorry. So I went to the imaging place, and when I got there, I was telling her that I have a fixed benefit plan, and she got my card, and she goes, Mr. Brignac, if you self pay today, we actually will do it for $450. And I went, I felt bad because I didn't even ask. I was always kind of caught up in the moment, just trying to get her in and get her situated. And I said, absolutely. So I paid the $450 right then. I filed the claim with Philadelphia American. In less than 4 weeks, I had a check back for $500. So not only did I save $250, I got $50 back more than what the claim cost me. Okay. These are scenarios that happen day in and day out with fixed benefit plans. Okay. These are not just, one time scenarios that I'm just pulling out because they sound good. These happen all the time. These happen more than not. Okay. So it's very, very important. Emergency room is $300 for the facility, $300 for the professional. You get 2 urgent cares at $300 each. We want you to go to the urgent care if you can. We have 1,000 for ground. Another one that I want to explain: 1,000 for ground. Air is 2,500. The air is not enough. I know that, but on the accident rider, we have $10,000 for air or ground. Most of the airs are going to be done because of an accident, or if you're in a rural area and they don't do a certain procedure and you need to be taken to a metropolitan area. That's where an air will come into play. And then in that case, the specified disease is such a robust product that we have more than enough benefits there to help offset that as well. So we have all angles covered to always making sure that we're minimizing the out-of-pocket cost of your insured. And that's what the important part is. For prescriptions, we reimburse $20 for generic, $40 for brand name. Okay. We can't have just a normal, copay, because that would be part of the major medical, the Affordable Care Act. But we have a great reimbursement of 20 and 40. Okay. It's real simple how you file the claim. So like I said, it really is on your preventative. Okay. You can use the preventative once the policy has been enforced for 60 days. Okay. Do not go on the 58th day and get a checkup. Okay. It will get denied. The policy has to be enforced for 60 days. All right. We'll pay $250 towards a mammogram. If they haven't had a colonoscopy done, we'll pay the first 3 years $500, and all of the preventative services we'll pay $250. Now, when we had our physicals, I was out of pocket usually about $250. Okay, between the ECGs, the blood workup ran about $500, and it paid about half of that, and that's fine with me because I was saving over $750 a month in premium. So to be out of pocket $250 for a physical was not a big deal. Okay, it more than cost averaged what it would be. That right there, my friends, is the outpatient part of the policy. Very simple. Okay, it's not complicated. Please don't complicate it. The worst thing you can do is try to over explain every little thing and try to, what's my copay? The question is, well, what's my copay? The great part is that you don't have a copay. Your copay is really your out-of-pocket expense. So your out-of-pocket, your copay is zero. On a lot of situations, your copay is zero. You could get money back. Okay, your copay might be $10, $5. Certain specialists, your copay might be $100 because certain specialists are certain dermatologists, they're extremely high. Okay, but in essence, we don't have a copay. You can go see any doctor, any hospital you want to go to, whatever fits your needs, whatever fits your situation best is what we want for you. Okay, so that is how that's what the benefits look like. They look very similar on the Optimum plan as well. Like I said, the outpatient part is a little bit less, but the inpatient part is a lot more. Okay, so just keeping that in mind. Here are some just some hospital what they charge. The average for a not for a nonprofit is 2,500. In Texas, it's about 2,600. Um, and so you can look at the different ones. These are just ones that were pulled. I always say they're between 2,600 and 3,000 is about what they usually run. Okay. So our plan is usually have enough coverage, and that's what we're trying to do to make sure that we have enough to take care of that so they're not left with any of those extra expenses. I like what this says. It kind of sums up what I talk about and what I kind of believe in. We believe that consumer-driven healthcare will make healthcare costs simple, transparent, and affordable. Okay, um, take control of your healthcare. Okay, one size does not fit all, and reward yourself for smart healthcare management. Okay. If you just take a little bit of, if you're a little bit proactive in your healthcare, not a lot, we're not telling you to be, a professional claims negotiator. That's not what we're saying. But if you ask, hey, is it cheaper for me to self pay or is the PPO cheaper? Just be a little bit proactive, take a little bit of initiative into your healthcare. Your savings are tremendous. Your benefits go a long ways, and you come out way ahead. Okay, that's what we're trying to really get at and to really kind of get across. These are our value benefits, and these are what I really love. Okay, um, the new era telehealth, the First Health Network, which again we work off of the Aetna network system. Point Health, get stuff repriced. If you go to a non PPO hospital, and we have Script Save on here, but I really like, either GoodRx or Drexy. It really helps lower the cost even more than what this does. So I usually use one of those RX facilitators rather than the Script Save. This is the accident. I call it a rider. If you're putting it on with the Health Saver Gold or the Optimum plan, but this plan can also be written standalone. Okay. I have written numerous plans on these. I have it on my friends who have kids in sports. For kids alone, it's $20 a month. This is a fantastic plan. You'll see over here, it's 1 unit or 2 units, 2,000 or 4,000. You get $100,000 accidental death. There's that $10,000 for air or ground ambulance. You get an additional $300 for hospital income benefit. It gives you some money if you happen to, have a dismemberment. Don't lose any fingers, toes, arms, or eyes. It's not worth it. Keep those. It's more important to have those than it is to lose them. But it's a great. It is 65% of all claims are accidents. Okay, so it's important that this is on there. This is part of my package of protection. That when you ask me to quote something, this is one of the main benefits that I put in there as one of those riders. This is the specified disease. Okay, the specified disease cannot be written standalone. It can only be written in conjunction with the Health Saver Gold or the Optimum plan. Okay. And the reason that is that I would not sell a benefit that has a $25,000 or $50,000 deductible. Okay. I wouldn't, there's no reason to have that unless you have it in conjunction with the Health Saver Gold or the Optimum plan. Because like I said, those benefits are paying the deductible, not the insured. And once that deductible is paid by the Health Saver Gold or the Optimum, both plans pay it 100%, and it comes out to some incredible benefits and some incredible monetary money for the insured. these are the diseases. So we took our 14 most, I guess, our most utilized diseases. And here they are. I'm not going to go through them, and we put them on this policy. It is, like I said, it's a fantastic policy. Once the deductible is met, like I said, it pays 100%. Okay, so like I said, I can't say enough good things about this policy. If they don't have it, and you put 30,000 critical illness, I had probably half my business was probably critical illness, and half was specified disease, because I didn't have the specified disease when I first started writing the Philadelphia American. It didn't come in until halfway through my tenure writing this, so that's why I didn't have all of them, and both of them were great. But this is even greater benefits and even a stronger package of protection. That's why I like this plan. This is a claim that I wanted to kind of go over. This was a guy who was in the hospital. He was in there for 4 days. He had a double bypass. I'm sorry, he was in there for 9 days. 9 days, 5 days and 4 days. Okay, 9 days. He had a double bypass. This is what his total bill was. I want to show up here. I think it cut off a little bit. Yeah. So the main thing here is what the hospital bills paid, the admission benefit. Go over here to the far right is how much they paid to the policyholder, the payment, how much specified disease paid or minus that. The insured made $21,500. Okay, that's how much the insured made with the $25,000 specified disease deductible. That's how rich these benefits are. Okay, that's how complete and how thorough these benefits are. Okay, that is like I said, a true claim that was, that went through the system, and we have numerous claims like this. This is just one. I saw one where a gentleman made close to over 40 grand because he was in there a lot longer, had a lot more done. All right, so there are a lot of great stories that can be utilized and used. Here is the true, I guess, the true more that an agent gets all throughout their policyholder portal. Again, the New Era Telehealth, the First Health Network, the Coral Bundle, the Fair Pricing Tool, the Healthcare Pal. Healthcare Pal is they are I have used them. I have clients that still use them. Agents, they are. If you have something that needs to be repriced, you can call them up. They will work on it. They will. Like I said, they do a fantastic job. They are, like I said, they are a strong team that works on getting things repriced and getting your claims down on your behalf. There's Drexy, and then you have your Point Health Tech and the mobile app. All of these benefits are going to be at your client's disposal when they become a client with Philadelphia American and they go in and look into their policyholder portal. Like I said, the ancillary benefits that come onto their policy are second to none to anybody. This is what helps set Philadelphia American apart. I sell these benefits almost as strong as I sell the benefits that are on the main parts of the policy, because these right here are such value added benefits. They bring so much to the policy. The insured needs to know about these just as much as they do the other benefits. I'm not going to go into each one, but here's Teladoc 24/7, 365. Here's the PAL RX Saver. You get a free one, but you can go in. They have a $10 version, and it is a wonderful, wonderful prescription benefit. Here's the Coral Bundle. If you're having a day surgery, you can call up Coral. They will negotiate the whole package for you and give you the best benefits and the best protection all in one. Again, something that they take pride in doing, and it really does help maximize your benefits. Healthcare Blue Book is your fair pricing tool. Um, I have had multiple clients use this, and mainly for a lot of them was for the colonoscopy. Gives you a sliding scale of where to use it in your colonoscopy, so you can use it for where am I at, where does it go. The Preston Endoscopy Center here in the Dallas-Fort Worth area, Baylor Surgery is going to charge you close to $8,000. The Preston Endoscopy Center is going to charge you $2,000. It's just, you know where you're at. We're paying 500, so you can get out of there for roughly, $1,700 for your colonoscopy. Not bad. You hear them. There's so many things that you can do by calling Philadelphia American, and they will talk you and walk you through. They will do a lot of the legwork for you. Like I said, they take pride in making sure that you and your insured know how to save money and to communicate it properly. Kind of what the cards look like. They will get their cards first, and then they will get their policy about a week later. Overview. If you just did my base sales presentation, when you're looking at a quote, went to the overview and had some discussion points. This right here would give you a really good gives mental and discussion points on the plan. Discuss the major medical wording as it applies to ACA. Okay, why ours looks different? Because we underwrite. The government does not want us in competition with them. Okay, so we underwrite, and our plan looks the way it looks because we're not a guaranteed issue plan. End of conversation. Okay, we are a PPO, not an HMO. Okay, but it's optional and flexible. It's not mandatory. You do not get penalized for not using it. And always emphasize PPO, not HMO. This is complete coverage, meaning it covers all areas of healthcare, in hospital, outpatient surgery. Okay. Deductible only applies to in hospital, minimizing their exposure. That's why we go with the 5,000 deductible, because it only applies if they're in the hospital. Okay. All outpatient services, day surgery, nothing has a deductible, only if they go into the hospital. This is first dollar coverage for all outpatient services, surgery, doctor visits, MRIs, CAT scans, accidents. First dollar RX reimbursement. You have teledocs, you have teledoc, you have the telehealth, you have the CARES, the repricing, and it's guaranteed renewable. Okay, meaning that we can never cancel you unless you don't pay your premium. It's not collectively renewable by zip code. This is true guaranteed renewable. Okay, it's fantastic. Underwriting. I want to talk about underwriting for a minute because remember I told you this is an underwritten product. It is not guaranteed issue. Okay, so we have health questions. My main thing here is look at the application. Okay, read the health questions on the application. Look at the underwriting guide. Take you 15, 20 minutes to familiarize yourself with the underwriting guide. It has your height and weight chart. It has general information in there. It's very easy, but once you look at your underwriting questions, once you familiarize yourself with the underwriting guide, it really comes and makes it simple. The pre-existing condition coverage is after 12 months, we will cover it. Okay. Certain things we will rate up 1 point. Okay. And then after that 12 months, we will cover it. Okay. You do not have to see the client, okay, in order to write the business. You can do it over the phone, do a tele app, however you want to do it. You can sell this plan all year round. Okay, there's no special election period or anything like to sell this plan, and there's no special certifications required. Only your life and health license to sell this plan. There's no FFM or state requirements to sell this plan. Okay, so we're making it easy for you. I'm here for you to answer your questions. I have done multiple three-way phone calls in the evenings with an agent and the client, helping them sell their first couple of plans to get them acclimated to the vocabulary and the verbiage and understand it. So, like I said, nothing is off the table to help you get going and to make you more comfortable into doing this. The best part about this team, is that you can't mess it up. Just knowing where the scenarios may be, talking to that 62-year-old on what they have, asking about the grandkids, asking about the kids, okay, letting them know that you have other options in the under 65, that you do the Affordable Care Act. If the Affordable Care Act is too expensive or they don't get a subsidized premium, that you have other options for them, that you are a complete agent. I call this, you are a 365 day a year agent. Okay, that you have something for everybody, that you can work for them and to solve their issues or solve their needs that they need for healthcare. This is a letter that I have that you can mail out to your book of business, letting them know that what you do in under 65. And I've had agents have good success with this. I have agents write 4 or 5. I've had the friends of their clients call. So all of this I have in a nice Word document that it gets you going and gets you thinking in the right direction. Simple roadmaps, team. Have the letter to your Medicare clients. If certain agents don't want to do it, ask if you can mail their Medicare clients. You're not going to try to sell their Medicare clients. It's just that people need to know what is out there for them on an affordable basis, on an affordable chassis. Advertising youth organizations for the accident plan. Activity breeds activity. Okay, this will help you go on the accident plan to write more optimum and health saver gold. T65 lists, market it to under 65. Okay, if you do T65, and when you're talking to them, ask if they have an under 65 spouse. What is that spouse doing? What are their insurance needs? A lot of times, the under 65 spouse is even more confused than the person turning 65 because no one's talking to them. Okay, but always remember, whatever we do, be consistent. That's really the main part of what I'm trying to get across. There are other options out there. Okay, it's not just ACA. The ACA is part of our conversation. But a lot of people don't, like I said, whether it be premium or they don't understand it. They went to a doctor. They're not taking it. They don't want to be on an HMO. They want something else. They want something more, flexible. They're relatively healthy and they need something for catastrophic. Whatever it could be, whatever it might be, there are so many other options out there that can be beneficial. The accident plan. We have so many plans at our disposal to talk to our clients, that I just want you to be aware of how successful to add to what you already are doing. There's no such thing as extra income in today's inflation, but I can help you add to what you're doing. If you did one of these a month, okay, you're going to add probably, it's like 15 grand to your annual income. It's got great renewals. The referrals off of this are fantastic. I still get probably once every other month, I get a call from an old insured Hey Joey, I'm calling you because Mary asked me to call you. She had a plan with you many years ago. She's on Medicare now, but I'm looking for something under 65, and she loved the Philadelphia American plan. I get those all the time. Okay, so it's great referrals. Remember, the more policies that you have in the household, okay, the more the more that you will the more that you will the better retention, the better referrals, and that's what we're trying to get across. Okay, everything we do is can help you write more Medicare, can increase your retention, can help you be more successful, and that's what I'm here to help you do. If you're writing Medicare Advantage and you need to be more successful in the Medicare Advantage gap or cancer plans or final expense, there's so many things that we need to talk about. Like our mantra says, our clients don't know what they don't know unless we tell them. Okay. We have to let them know, let them tell us no. Don't assume no. But we're not having these conversations with our clients. We're not talking to them at the point of sale. Okay. There's a lot of things that we can do to be more successful, and to increase on what we're doing. And that's what I'm here to help you do. That's what Copeland is here to help you do, and to try to, and try to, get you going in the next area, next step. You got to, crawl before you can, walk, and the old adage and the old saying. But like I said, we want to make it easy for you. I want to give you the path of least resistance. And so that's kind of what I'm trying to, get you to look at. This will be up on the Copeland YouTube channel. So go back and look at it. Go back and, look at some of the benefits. I don't mind sending this PowerPoint to you for you to be able to look at, and to be, to get, just a refresher, or to do whatever. So, like I said, all kinds of great stuff. But the Philadelphia American, their fixed benefit, what they do, underwriting takes about 1 week. And like I said, I couldn't be even more pleased on what they do, and how they pay their claims, and do other thing. Um, how do you explain how the 25,000 deductible is paid out when I tell you what, Susan, um, why don't you come off mute and ask me that question? I can't hear you, Susan. Still cannot hear you, Susan. So let me try to see if I can't explain. Okay, so let me look on here. So, um, all right. So how do you explain how the deductible is paid without the policyholder paying it? Okay, so the $250,000 is not a deductible. That's just how much that the company is going to pay out in one calendar year. Okay, the deductible is the 5,000 or the 3,000 if they get back the $2,000 admin fee. Okay, so it's not the 250,000 is what the company pays out in one calendar year, and then after in January 1st they get a new 250,000. Okay, so every January 1st their 250,000 resets. Okay, so it's just how much the company pays out. It's not how much they are on deductible. So That's all that is. And for the company to pay out $250,000 in one calendar year or whatever, depending on where that claim comes in, like I said, they would have to have benefits or claims in essence of excess of 800,000, because that's usually when you hear those numbers, that's retail, and that's not what a PPO or what we would usually pay. I hope that answers your question. If not, put that back in the chat. Edna, how does the reimbursement work? The reimbursement either goes to you or the hospital. Most of the time, if you are going into the hospital is going to have you sign a form, but all the money goes to them. Okay, and if there's any excess, they'll send it back to you. On outpatient, Edna, on the outpatient, the if the doctor office gets $120 and your bill and your they should have and your bill is only 100, Philadelphia American will send the doctor 100 and they'll send you 20. So Philadelphia American on the outpatient will actually separate it. Outpatient, day surgery, anything like that on an outpatient situation, Philadelphia American will actually separate the money and give you the excess, not send it to the facility. So I hope that explains that as well. Anybody else have any other questions or anything they want to ask or volunteer or any thoughts? Like I said, this is a great product. It's not for everybody. Remember the underwriting. Look at your application, look at your health questions. But it has a need for a lot of people. No social security number required. We can use it by having a TIN. Like I said, the flexibility is what I love about this plan. And, we want you to be as successful as possible. That's why I'm very passionate about this plan. And I want everyone to know what all we have and what all I can help you do to be, to get strong and to be comfortable as you can in working with this. If we don't have any more questions today, I am going to wrap this up. Again, this will be on the Copeland YouTube channel. Thank you, everyone, for joining. Hope this was beneficial. Y'all have a great rest of your week, and I will talk with you all soon. Thank y'all.